Welcome to Markets Now. I'm Asherook along with Randy Martinson with Martinson Ag. We're seeing mixed trade in the hogs right now. Cattle are lower, and we are seeing some mixed trade in the grains as well. And Randy, let's talk just a little bit about the grain markets to start off with. Of course, corn and soybeans have been on both sides of steady this morning. The key factor is that we held the lows, the support areas technically that we needed to hold here this morning, right?
That's right. I mean, it looked pretty tough here the way this morning was starting, the way last night started, and the way this morning's did kick into gear. But seeing the market bounce off a little bit off the lows certainly is a little encouraging. And I think the market is somewhat comfortable with the low levels that we've hit until we see what these numbers say on Friday. And I think the market is going to wait. I mean, we've priced in a pretty big number for corn and for soybeans as far as the stocks are concerned, as far as production is concerned. And I think the market now is going to take a wait and see attitude.
Right. So that's probably what we're seeing is some position squaring here ahead of the WASDE numbers. And let's talk a little bit deeper about the WASDE because you have this transition that we have to make from tight old crop supplies to a much bigger new crop supply, right?
Exactly. And that's what it looks like, especially corn. I mean, corn, we're looking at the 92 million acres. We're looking at trend yields at close to the 180. We're looking at production over 15 billion bushels. Stocks increasing to be over 2 billion with the demand structure that's in place. So increasing almost 700 million from the previous year. So yeah, corn has nothing friendly going into it for this report. I mean, it's what we expect. So something different from that might might change the market a little bit. For soybeans, it's not as bad. There we're looking at the same amount of acres as last year, but bigger yield potential, little tightening maybe of the demand side. But stocks are still building close to 90 million, 70 million to 90 million. So still, it's a stocks increase, which is a little bit negative.
Yeah, no doubt. But demand is another thing that is going to be a little bit in question here as we go forward, both on old crop and I think as we transition into new crop, isn't it?
It is. I mean, I still don't think, I think we're a little bit pessimistic on our demand side because of, Brazil having a big crop and being able to take some of the exports. But we're seeing a tightening as far as production is in a lot of other areas, especially when you look at it for wheat. A lot of other countries looking at lower wheat production estimates possibly for 23. So I think I think we're cutting our demand a little bit more than what's necessary at this point. So I think there could be some adjustments going forward. I think this could be one of the biggest production numbers we see for the year.
You're right. So if we have the most bearish part of the trade mentality or the thoughts about how big this crop is going to be kind of already dialed in, could we get a surprise? Could we maybe put a low in on Friday if this thing comes in maybe not as bearish as we expect?
Oh, I think we definitely could, and especially when you look at what's going on the weather side of things too, because the market hasn't really put in or had holding a lot of premium for weather. Now, things in the central to eastern corn belt are going great. Planting's going good. They're at record paces for both corn and soybeans. But things in the western corn belt and northern plains haven't been as rosy.
Yeah, so let me ask you about that. Will USDA account for the slow plant in the Dakotas and Minnesota, and especially since that's where a lot of these additional corn and soybean acres were supposed to come from this year?
I don't think they will in this report this early. I mean, it's still early as far as the game is concerned, and everybody remembers last year. A lot of us were up here in the north, didn't get in the fields until after May 20th, and we still got a crop planted, and we got a good crop because we had a great summer that allowed for good growing, the GDDs to be there. So I don't think USDA is going to account for it in this, but it's something that we're going to have to watch going forward. Right now, I mean, with the rains we picked up, rain still in the forecast, it looks like we're going to be at a carbon copy of last year.
Yeah. And let's also talk about how that weather is impacting, especially what we're seeing in terms of spring wheat production and the ability to plant there. And is the market recognizing that over in the wheat?
I think they are a little bit. I mean, we saw wheat put in that key reversal last week. We saw it put in it for the weekly closes. And we've held strength as far as wheat. I mean, it hasn't been pretty finishes the last couple of sessions yesterday, and then today hasn't been pretty to start. But we have been holding gains, and I think that is trying to put a little bit of weather premium back in the market. Thing is once producers get back in the fields, if it's that May 20th, a lot of them are going to concentrate on planting corn, planting canola, getting some of their higher dollar and their more important crops planted. They're going to wait to wheat. And I expect wheat acres to decrease because of it.
How much? How much do you think spring wheat acres will be down?
I still think we're looking at 500,000 less spring wheat acres, and I'm not expecting to see this increase in corn acres like USDA is either.
What about HRW? Because obviously there's going to be some abandonment there. Will that be recognized by USDA in this report or not? What will it mean for production?
I think we will see that in this report. That's something, I mean, USDA is supposedly making some actual observations and report that in this crop production report. So I do think they'll make some adjustments. We've already seen the Oklahoma Wheat Commission come in with their numbers, and you're looking at close to 40% on the abandonment. Kansas is talking about a 25% abandonment. I think some of that will come into play in this report. Probably not all of it, but I think a majority of it will show up in these numbers.
Yep, the production number, the estimate is above last year, which is a little bit of a head scratcher for me.
And I think that's something that we'll see adjusted in this. I think, one thing we'll probably see yields up a little bit because you always take your worst crop out and you leave your best. So yields might stay up a little bit, but they need to pull that harvested acres down. And I don't think the average trade estimates had that decrease adjusted for.
Gotcha. Okay, let's move over to cattle. We had a nice update yesterday, but we are kind of, I guess, mixed today. And the live cattle futures, is that market just going to wait for the cash trade for direction? And we're hearing that maybe cash could be better, but I guess the market wants to get it proven first.
I think you're right. I mean, right now, that's kind of the missing link this week has been a cash trade. At least that's what the market's looking for. We've seen it drop the last couple of weeks off of our big push that we saw in April. So I do think the market is waiting to see where cash is going to trade. I also think they're going to look to see what Friday's report's going to say. We're looking at, production cuts. We know that's coming. It's just a matter of how big will they be, but it's still, we need to get the cash to move the product first.
Yeah, and higher corn weight on the feeders. Is it just that simple?
I think it's that simple, and then also I think some of the demand for the pasture calves is starting to slow down. So we're seeing that spring push for supply is kind of slowing down.
Yeah, plus they're supposed to get some rain in some of those southern plains areas, aren't we?
They are. There is rain in the forecast for the winter wheat region for the southern plains. They're looking at getting up to 2 inches. They've had some good rains. It certainly helped, but it's not helping the winter wheat, but it's going to help the pastures and the grass.
Gotcha. Hogs, we had a bit of a bullish reversal yesterday. Market is trying to build on it today. Do you think we can keep building on it?
Boy, that's a tough one. I mean, the hog market seems to be the short leg of the spreads of any wanting to put spread trades on with whether you're buying cattle or anything else. It's kind of like the Chicago wheat in the grain side of the equation. It's going to be tough, I think, for hogs to see too much of a push. I think if we start to see demand increase, that might help it a little bit, but it's going to be a tough sled for the hog market to see much push.
Is demand the problem or is it supply? Because we have sow liquidation going on. We have the weekly slaughter totals are above where we were a year ago. So I'm just trying to figure out, is it supply or demand?
I think right now it's more on the supply. We're seeing good supply hit the market. We need the demand to kind of back it up. Exports were decent, so we're starting to see one equation kind of getting taken care of. I think if domestic demand can pick up, that will help.
That certainly would help. Thanks so much for joining us, Randy Martinson with Martinson Ag, and that is Markets Now.